Hey, good morning. This is Chris Robinson, Rob Jack Marketing. Sorry I did not do an afternoon update yesterday. I'm traveling. I'm in Colorado doing a seminar. Um, so, on that note, here it is this morning. Let's talk about, first of all, what's really going on with the China soybeans. It seems like it's more of a media story than anything else. If China's buying beans, it's not because they need them, um, they're buying very expensive beans. We have the most expensive beans. We have the most expensive wheat. And there were some rumors yesterday that China might be buying some wheat from us. It just seems more like window dressing to me personally. I think this is an opportunity for producers to, um, if you don't want to sell it, I understand because hey, it may go higher. I totally understand that, but I would at least roll up my floor, my paper floor, because when it does correct, we don't want to be in a situation like we just saw with cattle. We had a tremendous rally. People get convinced that it's never going to turn around, and then we lose 60, 65, 70% of the rally in a matter of days. So I'm not in the business of calling tops. I work with farmers and producers who are always net long bet. We want to use rallies to make better cash sales. That's what we're trying to do here on these. So long story short, is China going to buy 2 or 3 more million metric tons? Yeah. Are they going to do another 6 to 10 million? They promised to. Normally, they don't even buy right now. Now, they did clear out 3 million metric tons of their own at home. So that's inventory replacement. And they like to replace their beans with our beans. That's normally what happens. So, the one thing I want to talk about too was open interest. You can see the open interest, bean open interest jumped again yesterday, but everything else kind of fell. It fell across in meal, oil, and corn, and also about 2,000 contracts in the wheat. So that suggests the rally is being fueled by short covering, right? People are buying back, losing positions. So when they're done buying, who's going to continue to buy it? And there's an old story of bull needs to be fed every day. So I wrote my letter yesterday. I don't care about the why. If you're a farmer or producer, you need to use this rally, and you can let people, the experts, argue out who was right and who was wrong. At the end of the day, nobody pays somebody else's bills. That's what I learned as a young person. December corn overnight a little bit higher. I'm going to check it real quick right now because I pulled up December. Here we go. March corn, 449 and 3/4, up a penny and 3/4. Jam beans unchanged after another almost a 70-cent range overnight, 69 and a half to 51 and a quarter. Um, so if you're up trading tonight, the beans, I think you're going to get whatever you deserve, honestly. Um, yeah, 15-cent range in March beans, and we're lower. At some point, we're going to pull back here because we have had such a tremendous rally. Again, I would use it to make cash sales. I would use it to roll up floors. It's like beating a dead horse. Um, if you think of George Soros or Paul Tudor Jones, and you can call the tops and the bottoms, I don't know why you're listening to me. Nobody can call the tops and the bottoms. What you want to try and do is capture the meat of the meal, the meat of the move, excuse me. And I still think this is a great, great, great opportunity for producers. Please don't let it go by because 2, 3, 4 months from now, we could be singing a different song. And again, I just can't stress that enough. D Sweet overnight up 2 cents, 546 and a quarter. If you look at December Chicago wheat, it's been pretty volatile, right? We had a 63-cent rally, then we dropped 25 cents. We've gone from 525 to 549, so a 25-cent break and a 25-cent rally, and that is just almost untradeable. You can't trade headlines and you can't trade um, surprises, and because there's no fundamental story out there. And like I said, we have the most expensive soybeans in the world. We have the most expensive wheat in the world. China is just buying this, like I said, as a courtesy. Um, they're spending a little money, I think, to do some PR work, in my opinion. Now, I could be wrong, but at the end of the day, I want to make sure that I'm selling into this rally. We're using these technical levels to get stuff done. And vice versa. If we sell into this rally, people say, "Oh, you're a bear, you're a bear." No, I'm not. Every time we've made sales, we've re-owned stuff with cheap calls. So I believe in being balanced, and but working with farmers and producers, you've got to defend that long position. So that's why I lean towards always saying, "Hey, when you get a revenue rally, look at selling it, or at least protecting it on paper." And the cattle, we'll see what's going to go on today. After another what 14 to 27, no, almost a $14 trading range in feeders yesterday. If you had told me that we were going to cut tariffs and talk about um, making nice with the markets, and you had the president saying again that he's going to do whatever he can to get cattle prices lower, and the market turns around and rallies, that's pretty interesting, right? I think it's just more technical stuff. Again, people's eyes kind of glaze over with technical stuff because you can go as deep as you want or as basic as you want. I try to keep it very, very basic. I look at it this way: January feeders had a rally from 255 to 380 and change. We came back here to this 317, 318 level. We've danced around it for about a week and a half. We whipped around a lot. We went as low as 310. 310.05 was the low actually yesterday. So we had that, excuse me, 2 days ago. Um, so there's going to be a lot more whipsaws going on. But when you've had a break from 380 to 310, when you've had a $70 break, um, a lot of people get out of the market, and that makes the swings more volatile because you have less players. A lot of people um, probably wishing they never heard about cattle, I can tell you, who've never traded it before. And I think that's what's going to go on here with soybeans. You got somebody who last week was trading Bitcoin or whatever, some um, Nvidia stock, whatever. Some stock guys, when they get into the commodities games, usually it does not end well. Okay, that's it for today. We'll see what happens. Crude oil back under $60. The stock market is moving around 300-400 bucks at a crack, 400 points at a crack. Excuse me, in the Dow. The S&P 500 made a new low overnight, so we've had a little bit of a correction. Again, is that market going to roll over? It's possible. We're heading into the end of the year. You got to remember, back in April, the S&P was down at 4,800. Went from 4,800 to nearly 7,000. The high was 69.52. So here it is. We're heading into Thanksgiving. If somebody's made a lot of money, they're going to be taking profits, buttoning up towards the end of the year. Last thing you want to do if you're a money manager in the stock market is turn a good year into a bad year. So I'd imagine that we could be subject to a little bit more rollover. Plus, we're going to see what the Fed's going to do. I mean, there's always a reason for the stock market to go down. Um, Again, if you're long that market, you can hedge that just like anybody else, just like we hedge uh, feeder cattle, just like we hedge coffee or whatever. If you think it's going to go down, you either sell the futures, which can be very, very dangerous if you're wrong, or you go get yourself a put option. Okay, guys, have a good rest of the day. Call me 312 638 8868. I'm in Colorado, but I'm available all day.